More predictions, more predictions, more predictions by Don Gatley and Gino Fronte with the National Real Estate Cafe to keep you in the know. And we don't have our crystal ball with us, but hey, let's go to the screen. I think there's one right on this screen about what Fannie Mae thinks is going to happen with the housing market, Gino.
I mean, really interesting stuff happening at Fannie Mae. Fannie Mae and Freddie Mac may come out of conservatorship in the next couple of years. Good news, bad news. Good news for rates, bad news for qualifications. That qualifications will become a little more strict. But what you really wanted to focus on here, Don, was more about interest rates and the Fannie Mae projections.
Right. Fannie Mae is always putting out the projections. Fannie Mae, Freddie Mac, NAR, MBA, they always put out the predictions of what they think the rates are going to be. In most cases,
they're wrong.
They're wrong.
Yeah.
We usually are a little bit closer than them. But I think they're getting a little closer. What's funny is they usually project high to be conservative. In this case, I think they're projecting a little low because rates have improved. We'll go back to the screen here. And Fannie Mae basically gave their projections that the economy is going to slow some, the housing market, and basically they're projecting a 2.2% decline in growth overall, in the economic growth.
That's a little steep.
I think so too, but they are right. I think the Federal Reserve taking a more dovish stand, meaning they don't want to raise rates potentially three. They're talking 3 times next year.
Yeah,
now we're talking
about 1 to 2 now.
Exactly, and then they're thinking because of the dovish stance and because of the slowdown, they think that rates should hover right around where they're currently at, around the mid-4s.
Crazy. Not going to happen.
Okay.
You're talking about instability has to stay where it is. We've been talking about it for the last few days. You have to have no deal, no government, no war, no Brexit, no trade war.
Nothing new coming up.
And no new problems.
Right.
Not going to happen.
No, we agree. So we think you should jump on these rates while you can. These are some of the lowest rates we've seen in 6 months. And they went up literally 0.75% higher than we're now, which crushes your ability to purchase the home of your dreams, your purchasing power,
take cash
raise
out
your
to debt,
payment,
consolidate.
Right, refinance it to consolidate, build out your home. It's more important than price.
So I'm going to give you a real life example. I've had a 3.625 rate on my house now for a few years. Great rate, right? Why would I ever touch it? But I have a HELOC. And I'm starting to think maybe I won't pay off that HELOC as fast as I thought I would, and maybe I'm going to hold that debt a little longer. And I'm starting to look at that HELOC, and the interest rate continues to rise, continues to rise, continues to rise, continues to rise. And now I'm looking at my blended interest rate between the two, and I'm thinking, I might just go ahead and put this whole darn thing into one and then forget about it forever.
Right, we just have a client we're doing that for, and I ran all the numbers. We're like, it doesn't cost you anything to do the refinance, and you're going to save $180 a month. Why wouldn't you do that?
And if you allocate the $180 a month to your mortgage, which is a payment you're obviously comfortable making right now, then you actually end up paying your house in less years than the new year, in my case at least, for sure. In their case, I think as well.
In their case, it is. But in their case, they're like, we're not staying in it for 30 years. We only plan on staying in this home for a little bit, so we're not worried about losing a little bit of equity over the next thing. We'd rather have the $180 a month.
Okay, the other thing to take advantage of right now is adjustable rate mortgages. If you have a large mortgage, I'm talking about over $1 million, or over $800,000, we've been looking at a lot of jumbo loans over $800,000.
It's a difference on this $2.4 million loan that we're doing right now is a difference between the fixed rate and the adjustable rate. We're talking, you're fixed for 10 years, by the way. It's a good adjustable rate.
Long-term arm.
Fixed for 10 years. It's a difference of $1,400 a month in the payment.
So what's our total savings for these people?
Over the 10 years?
No. Our total savings monthly for these people.
$1,900.
I think it's
$9. No, it's $19.09. I just ran it this morning.
Okay.
So $19.09. Basically over $19 by refinancing from what the loan they got to get into the home versus what we get them now because jumbo rates are amazing.
It was 6 months ago, and jumbo rates are great right now.
Boom.
Yeah.
All right. Make sure you get these sent right to your phone by texting NREC to the number 58885 or find out more at donandgino.com.